You can't afford this.
And the process,
How much money they want, the credit, the income.
waiting until your mortgage matures,
You're looking 2 to 3 weeks.
who's going out and borrowing credit cards,
Do not use your credit cards.
which are luxury items.
When I finish with them, they don't go and buy that house.
That was a good one. And people spending money which they don't have.
Don't even have that paycheck to paycheck.
So are you trying to say that?
Sell the house.
So welcome to The Mortgage Den, hosted by Northwood Mortgage. I'm Nick Da Silva. I'm the principal broker here. And with me, another mortgage broker, Nirvina Shamshudin. Today, we're talking about managing your holiday debts. In a simpler way, it's just managing your debts in general. We live in a world where access to credit is very easy. The banks make it easy to give us credit cards and lines of credits. And we live in a world where we want things and we want it now. People like Amazon make life easy for us, where we can order stuff today and have it delivered tomorrow. Nirvina,
Or the same day.
how's that run in your family? I mean, how not just with your family, with your clients? Do you see a behavior that allows them to run up credit cards and credit facilities very easy?
Absolutely. I see that every day because I receive the bank statements, because I ask for bank statements when we're doing a refinancing. And I've seen the shopping, the habits that they have. At the end of the month, they cannot afford to make the payment on the credit cards.
So let's talk about refinancing. What's the benefit of of doing a refinance to consolidate their debts?
Cash flow. A lot of people don't have that cash flow. So what they do, they rack up all their credit cards. At the end of it, they have 50, 60, 90, $200,000 in credit cards. They use the equity in their home, and they consolidate all those debts to make one payment.
If they weren't making those payments to the credit cards, what would happen to them?
They go directly to collections. It would ruin their credit. And it'll be tough for us to go to a lender, an A lender or a B lender, if the credit is ruined.
So some of the benefits, as you said, is cash flow and fixing their credit.
Fixing their credit.
So Nirvina, they've been borrowing on credit cards. What is the cost of an average credit card right now?
29%, 19%. Depends on who's the creditor.
So the benefit to refinancing and put everything into one debt,
you get a lower rate.
it brings down their cost of
Bring
borrowing.
down the cost of borrowing. So if you consolidate 5 different credit cards, you get one small mortgage. If we are not able to get you a line of credit at the banks, we can get you a second mortgage. The rates are typically still better than a credit card, but you're able to make that payment.
Nirvina, what is the downside to having someone borrow to pay off all their debts?
You increase your mortgage amount. It eats out the equity of your home, and it takes you longer to pay it off.
Could it upset your retirement plans in the future?
Absolutely.
So Nirvina, what is the best time to consolidate all your debts?
I would not say there's a best time to consolidate your debts. If you have all these debts, $50,000, $60,000, and you can consolidate it at any time. If you want to put all your debts with your mortgage, then you're going to have to pay a penalty to break that existing mortgage if you have a lower rate. Because now that rates are higher, it may not make sense. Or you can do a line of credit or a second mortgage to consolidate those debts. At the time of renewal, you can combine both together.
And the process, how long does the process take?
The process takes within 2 to 3 weeks. Because you do have to get all documentation ready. You got to get an appraisal done, because a lender would want to make sure that there's an appraisal to confirm the value of the property before they'll lend.
Let's talk about the process of getting a refinance done. How does it work?
So from the time the client call, I will go through all their history with them, ask all the specific questions pertaining to the mortgage and how much money they want, the credit, the income, any pension income, divorce. So that's where you start from. Then I send them the application, or they will book an appointment to come in and see me. We sat down, we take the application, we do a credit check, then we submit the file to a lender. If there's room in there, and we can always get an appraisal, we order the appraisal up front. While we're waiting on the appraisal, any outstanding documentation we collect. File is out to the lender for an approval. The approval came in, the client will come in, they will sign it, or we do a DocuSign. Once that is done, it goes to the lawyer. So you're looking 2 to 3 weeks.
So from start to finish,
From
2 to 3
start to finish,
weeks.
2 to 3 weeks, yes.
2 if it moves smoothly and the appraisal gets ordered right away.
Yes, the appraisal
3
usually gets ordered right away.
What would you say about waiting until your mortgage matures to put all your debts together, where you don't have a penalty, versus breaking it midterm?
You looked at, as again, this is a cash flow also. If the clients cannot afford to make those payments on the credit cards, it will make sense for them to do it.
to break it early.
I cannot advise a client if they're on a lower interest rate right now and their renewal is not come up at end of 2025 to break a mortgage. I can always advise them to take a 1-year term right now or an open, and we can consolidate all their debts now. And then when that renewal comes up, we put them together.
This podcast is being broadcast as of Wednesday, November 27, 2024. So Nirvina, you're talking about breaking the mortgage and maybe not to their best advantage. What is our interest rate environment like right now versus 4 or 5 years ago?
Oh my God, absolutely difficult for clients. Interest rate 3 years ago with what I've done for my clients, 2.54, 2.39. Now you're looking at the best at 4.99 on a 5-year.
So rates have gone up, making it difficult.
Rates have gone up tremendously.
Right. So breaking and giving up a low interest rate may not make a lot of sense.
No, it does not make a lot of sense because I do the calculations for the clients.
How does your favorite programmer who's going out and borrowing credit cards avoid this kind of problem in the future?
Do not use your credit cards. If you can avoid using them, don't. You don't need to give the gifts. You don't need to do it.
What about working with a budget? Have you ever worked with a budget with your clients?
I do a budget for every single client that comes through my door. Every one of them. And I'm sorry to say that a lot of them, when I finish with them, they don't go and buy that house because they can't. Because at the end of the day, you have $130 or $99 left back from your paycheck.
So are you trying to say that as a consumer in our environment these days, a lot of consumers are living paycheck to paycheck?
Paycheck to paycheck, yes. Some of them don't even have that paycheck to paycheck because they're borrowing from Peter to pay Paul.
When you look at the budget that your clients are producing, what percentage goes to necessities and cost of keeping a house versus spending on items which are luxury items?
I haven't seen a lot of luxury items. All I'm seeing right now when I looked at the clients, when I'm sitting with them and I'm going through it, this is what you bring home every month from your paycheck. This is what your mortgage, your property tax, your house insurance, your hydro bill, your gas bill, your telephone, your car insurance. I do the whole budget. There's nothing left over. Just by paying that, there's no money left over for food. So they borrow from their credit cards to do that. That's all the budget I am seeing right now for the last year.
So not only are they struggling to meet their regular necessities,
that's right.
They're borrowing on credit cards to pay for these necessities
yes.
And also to pay for these luxury items,
yes,
the
because
trips.
I've got a lot of clients right now that they're borrowing from their credit cards to make their hydro bill and the gas bill. Because the income is not there.
Nirvina, what are the other options they have to avoid this revolving door of credit?
I sit to the client after I go through all this, and I said, you can't afford this. Sell the house, rent for a while until things start getting back or rates go down. Right now, I've got 3 clients working with our real estate agents, and the house is up for sale because they just can't afford it.
So Nirvina, thank you very much for spending the day with us today, helping us with understanding what the challenges are with refinancing and people spending money which they don't have. For my public listening right now, thank you for joining Northwood Mortgage's Mortgage Den. You can find us at northwoodmortgage.com. Thank you.